All right, let's jump right in. Today we're going to break down a system that's designed to do something pretty radical. Get ahead of the market. Instead of just reacting to the headlines after they drop, this is all about anticipating the very events that create those headlines in the first place.
And boom, there it is. That one sentence pretty much captures the entire shift in mindset we're talking about today. It's about moving from being a passenger, just along for the ride, to actually trying to get in the driver's seat.
I know what you're thinking. Schedule the news? That sounds impossible, right? News feels totally random, chaotic. But, and this is the key, what if I told you that many of the most important, market-moving events are actually known about weeks or even months in advance? Yeah, that's the secret we're unlocking.
And this really gets to the heart of a dilemma that pretty much every investor faces. Are you constantly playing catch-up, or are you the one setting the pace for your own decisions?
So think about it like this. On one side, you've got the reactive investor. Their phone buzzes, breaking news alert, and they just scramble to buy or sell. They're always a step behind. But on the other side, you have the proactive investor. They already knew that event was on the horizon. They had a plan. They're not chasing the price, they were just waiting for it to come to them.
So to build a system like this, you have to start with one foundational concept. And for us, that concept is the catalyst.
Let's be super clear about what this means. A catalyst isn't some random rumor you see on social media. Nope, it's a specific, predictable event that's already on the calendar. We know when it's happening, even if we don't know the exact outcome. And that predictability, well, that's where you get your edge.
And we're not talking about anything obscure here. These are events you see all the time. A company's quarterly earnings report. That's a catalyst. The final deadline for a massive government contract. Absolutely a catalyst. A big, hyped-up new product launch, a key ruling from a regulator. These are the kinds of scheduled moments that force the market to sit up, pay attention, and react.
Okay, so we've got the what. We know what a catalyst is. But now for the how. How do we get all of this organized? This is where we go from theory to practice and actually build the calendar that lets us go from chaos to control.
And it really just breaks down into 3 pretty simple steps. First, you've got to gather all these important dates from all over the place and put them in one central location. Second, you sift through them and identify the ones that are really important for the stocks you actually care about. And third, this is the magic part, you set up automated reminders so you never ever get caught by surprise again.
So, for example, if you're watching the whole AI space, your calendar would definitely have NVIDIA's and AMD's earnings dates locked in. But for a company like BigBear.ai, which is more defense-focused, you'd be tracking those huge Department of Defense contract decisions. The whole point is, every company has its own special set of catalysts, and your calendar has to reflect that.
And this is what's so smart about the system. The timing. You don't get an alert when the news hits. By then, it's way too late. The system is designed to ping you 2 days before an event, and then again 2 hours before. That's your window. That's your time to review your game plan and get ready to act.
And the best part? You don't have to do this manually every single day. The system is designed to run on autopilot. You use workflow tools like Zapier or N8N, which are great for connecting different apps, and they can pull public data, drop it right into a Google Sheet, and then use something like Slack to send you those perfectly timed alerts. The tech does all the heavy lifting for you.
Okay, so getting an alert is great. Fantastic even, but it's only half the battle. Knowing exactly what to do when that alert goes off, now that's what turns a simple calendar into a real system. This is all about taking emotion completely out of the decision.
You see, you have to have your if-then rules decided ahead of time. For instance, if a stock I own has been a big winner and it has an earnings catalyst coming up, then my rule says I trim 1/3 of my position, lock in some of those gains. It doesn't matter how bullish I feel in that moment, the rule is the rule. And on the flip side, if a stock is a loser in my portfolio and its big catalyst event comes and goes with a whimper, then the rule says it's time to cut it. The decision is made logically way before the pressure is ever on.
And that just nails it, doesn't it? This is the ultimate benefit. Investing based on vibes or gut feelings, that's where so many people get into deep trouble. A system built on rules acts like a shield. It protects you from your own worst enemies, fear and greed.
Okay, theory is great, but let's see how this thing actually performs in the wild. We're going to look at how the calendar and the rules come together with a couple of real-world examples. Let's start with a huge one, NVIDIA's earnings report. I mean, this is a massive market-moving catalyst that basically everyone is watching. So in this particular case, the preset rule was really simple. It was all about portfolio allocation. The rule was,
If my NVDA position gets bigger than 15% of my total portfolio, it automatically triggers an action. So the Catalyst Calendar alert was just a reminder to check that rule before earnings hit. And because that rule was already defined, the decision was a piece of cake. The position was trimmed back down to its target size. There was no FOMO, no fear of missing out on more gains, no panic about a potential drop. It was just calm, cool, logical execution of a plan that was already in place.
Now for a totally different kind of catalyst. This isn't a scheduled earnings call for a giant company. This is a government contract deadline for a much smaller one, BigBear.ai.
This is so cool. The calendar sent out that alert 48 hours before the contract was supposed to be announced, and that 2-day head start, that was the whole game. It gave just enough time to review the position and decide whether to add or trim before the news hit, and the rest of the market went into a frenzy, ultimately causing that big price spike.
And I think that's the perfect question to leave you with. Just imagine that for a second. What if, instead of being surprised by the market's next big move, it was already just another appointment in your calendar? An appointment with a clear, predefined plan of action already attached. That, right there, is the power of scheduling the news.